global financial landscape is in the midst of an unprecedented shift. The driving force behind it is financial technology, or FinTech, with hundreds of millions of euros invested, year-long mega tech events, and accelerators like this one designed to launch startups onto the world stage. Dubai has established itself as a leading hub for FinTech in the region. As of 2018, the United Arab Emirates has been home to almost half the FinTech startups in the Middle East and North Africa region. The UAE accounted for 47% of FinTech investment in the MENA region as of 2019. And the Emirates garnered a whopping 69% of funding over the same period. FinTech's challenging big banks thanks to innovations in fields like mobile telephony and big data, but what's needed for FinTech startups to thrive?
So to attract startups specifically in FinTech, you need to build an attractive ecosystem that enables them to access this sector. And that would be access to regulation, access to funding, and the DIFC has launched a $100 million fund dedicated for investment in FinTech. And this is where our accelerator program comes in, where we provide that opportunity for the startups to pitch their solution to more than 22 financial institutions.
Participating in the DIFC FinTech Hive definitely helped us a lot in terms of, first of all, soft landing, visas, subsidized office space. And so they've really thought it through. We've set up a company in Switzerland, in Russia, in the US, in Bahrain, Jordan, and setting up in Dubai was probably the best experience out of the bunch.
One of the major networking events that has fledgling FinTechs flocking to it is Dubai's STEP conference.
So the idea is to build, Dubai as a startup hub globally, showcasing the best of startups and technology in the region and Dubai.
One FinTech startup that's left its mark on this year's STEP conference is Sarwa. It was born out of the DIFC FinTech Hive, and since launching in 2018, it's grown exponentially.
Sarwa is a robo-advisor, and basically what we do is we help people invest their money in international markets. You just go to our website, you answer a few questions, and based on that, we assess your risk profile, and we recommend a portfolio of investment. You accept it, you fund your account, and that's it basically. Your money is invested into international markets. We're seeing around 20% month-on-month growth.
Venture Fund 500 Startups has over 2,000 investments spanning over 75 countries and 370 million euros in assets that it manages. I asked one of its partners what he looks for in a startup before reaching for his checkbook or banking app.
Honestly, the most important thing is the quality of the team. And it's not about education or pedigree or anything like that. It's like, are these people hustling? Are they going to make sure they succeed at all costs? And are they going to be the ones that are going to succeed with all the obstacles that are going to be ahead of them? And so we look for that sort of spark, passion, determination, and some indication that they've already done something. They're not just sitting around with an idea at home. They've actually gone out to the market, got some customers, some users on board.
Some banks are struggling to keep up with the pace of innovation in the financial sector, but there are other FinTech startups whose aim is to remedy just that.
Consumers don't like traditional ways of banking anymore. Every bank is now feeling the heat of the technology and the disruption. At some point, they need to figure out who to partner with. And we do the scouting, we screen the FinTechs, we know them, and we do the matchmaking between the FinTechs and the institutions.
As FinTech startups continue to disrupt the very fabric of the financial world, it appears many established institutions are left thinking, if you can't beat them, join them.